All right, we are live. Let's give it another minute or two so we give people the time to join, and then Pedro and myself will kick it off very shortly, talking a bit more about Credix and Addem Capital, but mostly the trends and the opportunities that we see for blockchain and blockchain-based credits in the Latin American markets. Starting in a minute. All right, let's get this going. So, hi everybody. My name is Thomas Bohner. I'm the founder and CEO at Credix. Very shortly about myself, I have a background in financial services. Started out my career in the world of investment banking. Transformed myself into an operator and an innovator. Got passionate about blockchain technology and how it could truly transform the world of capital markets. And then through Credix, got into private credit, debt capital markets, and securitization. Today, I'm here with my good friend and partner, Pedro Cetina from Addem Capital. And so the goal really today is that we will talk a bit more about the partnership that we have set up together. We'll talk a bit more about the Brazilian, the Mexican, and the broader Latin America opportunity, but then also some of the trends that we see in legal, in blockchain, and how that really impacts the business that we are working in. So without further ado, I will pass it on to you, Pedro. Maybe you can tell the audience a little bit about yourself, and I'm definitely also keen to learn more about Addem Capital, why and how and where did it get started, and what's the focus of Addem and what you're working on.
Great, Thomas. Thank you very much for the invitation. It's a pleasure to be here. Hello, everybody. Just a little quick intro on myself. I've been entrepreneur for 10 years. I never have had a formal job. 3 years of my entrepreneurial life were on different verticals. And now I've been 7 years on fintech related type of ventures. 4 of them on a fintech I co-founded back in 2016, and the 3 most recent years on Addem Capital. And connecting that to what Addem Capital is, while being a fintech entrepreneur, when I had no experience and fintech was still a buzzword on the region, we were chosen as the best fintech in Latam in 2017, not because we were awesome, but because the competitive landscape was pretty different with what we've been experiencing lately. And on that experience, we went through all the different fundraising phases, both locally and from institutional funders on the States. And we got to understand how difficult it is for entrepreneurs to raise money from institutional investors in accordance to the process that they must follow for getting some kind of funding locally. So what we aimed to build and what we have been working in Addem Capital is for us to be able to develop 3 entity approach in which we have a monitoring agent, a consulting boutique firm, and also a structured debt fund for us to be able to provide liquidity into the Latam region, acting as market makers of different fintech opportunities or other type of opportunities that have the same logic than fintech opportunities have. So in Addem Capital, which is the most famous brand within our group. We do a structured debt financing for asset originators throughout Latam, specifically in Mexico, Colombia, and Brazil. Although we have our highest allocated volume in fintech, we also do renewable energies, real estate, agrotech, and health tech. We have an average ticket of 10 million USD. We go all the way up to 16 million USD on our own on companies we like. And we've partnered with awesome platforms such as Credix for us to be able to get to 50 mil USD tickets alongside senior debt investors. But I'll talk further on this broadcast on that. So that's a really brief summary of who I am and what are we doing in Addem Capital.
Thank you very much for that, Pedro. And I think it's really impressive to see the brand that you have been able to build out with Addem Capital, because I know when you guys got started, indeed, like fintech was still a hype, private credit was definitely not that popular, and in countries like Mexico where you were active, like there is almost none to zero, and definitely when you got started, like infrastructure or a playbook on how these things get built. So talking about a true entrepreneurial story, and things are just getting started, I believe there. Maybe interesting to tell the audience a bit more about is how Addem and Credix got to know each other, right? I still remember when we had our first meeting and conversation, we were both a bit careful. It was like, okay, are we going to be friends? Are we going to be competitors? How do we feel? How do we think about the space? Can you maybe elaborate a little bit for the people on this call, like how is that thinking evolved? Where did you value in the beginning in partnering with Credix, and how has that partnership also evolved over time speaking?
Sure. Actually, it was kind of funny because we back in 2019 we weren't sure what was Web3. We weren't sure how to use blockchain technology to anything related to what we were building. So it was kind of a buzzword for us. And then randomly we ran into these lending protocols that were related to blockchain. And I was introduced by the managing partner of a fund I'm invested in, that it's named Rallycap, to two blockchain protocols. One of them was Credix. And then when we started the conversation with both protocols, we somehow realized that blockchain and specifically lending protocols were a perfect match to what we were building, taking aside the blockchain part that we didn't understand. So at the time, I spoke with Thomas when I got. I knew they were underwriting fintechs in Brazil. I knew they were also underwriting multi-tranche deals with senior and mezzanine slices. That it's something really uncommon for companies below the 30 million USD threshold. And when we understood the technology and how it could be used for what we were building, we got overexcited and put on a special team on understanding how we could plug that technology, and we could leverage platforms such as Credix for us to be way more efficient on underwriting traceable and highly efficient, but also highly strong from a collateral perspective, debt facilities that could be attractive for institutional investors that are looking to enter into the Latam region, but might not have the capabilities for doing so on their own. So that's how our conversation has evolved. And now here we are. We have already co-funded 6 or 7 deals already. I have lost the count on that number. And I think it was a great intro for Hayden to make, and really excited to see where this leads now that we are plugged in.
Exactly, exactly. And I can really emphasize that from our side it was really a similar experience, but then from the other side, right? So I think we started Credix, Maxim, Shaim, and myself, really more coming from a background of technology operator and building infrastructure. And so when we came with a vision and build out the idea of a new debt capital markets infrastructure for Latin America, very quickly we realized that if we wanted to scale this, we had to bring on board what we defined as underwriters, right? Like local specialist partners that could really do due diligence, source deals, but also bring up capital. And so, whilst pitching our seed round, that was one of the biggest promises of Credix, right? Creating that ecosystem, decentralizing the process, and thus also creating a more scalable platform level. And so I think in Addem Capital, we truly found a partner that could do that. And we found a partner that had the local expertise in Mexico, that could underwrite fintech and structured credit, and has the capital to deploy. And what we were very pleasantly surprised with is indeed also the broader vision that you guys had from the beginning of on how blockchain, how technology, how digitalization could really impact the future of these markets. And so it has really been an exciting partnership, Stan. Now, before we dive further into like how we think and how we believe these markets should look like in 5, 10 years from now, can you maybe for our audience give a bit of background on like what is the state of the current Mexican market for debt financing, and how have you seen evolving that already positively and or negatively the last 5 years from an Addem Capital perspective?
Great. Connecting that to your last question, and I'm happy to answer this one. I think, unfortunately, in Mexico, Mexican investors are risk averse. Mostly, what happens in Mexico and Latam in generally, taking aside Chile and Brazil, which are a whole different animal, the local players are not willing to take any risk, and the only way they lend to SMEs, disregarding they are fintech companies or not, companies that might need anywhere between 20 to 40 mil, which is middle market financing. They tend to offer liquidity as long as you have some real estate assets available for pledging. So what that causes is that only previously wealthy people or people coming from a wealthy background can access to these tickets between 10 to 40 million USD. So, and on the other side, in Mexico specifically, as we are really close to the States, the opportunity is huge, but the players that have been willing to enter into the market are mostly IRR junkies, people that are not looking to develop a proper business model in which the money they bring into the region comes along value added. They just want, they have a winner take it all philosophy. And all of the, or not all, but most of our competitors, if we can say we have a competitive landscape, because opportunity is way bigger than the sum of all the lenders into the fintech space. What we've seen is that they have a really aggressive model in which they never lose, they don't add much value, and they tend to take all the provisions for themselves. It can be warrants, it can be exclusivity agreement, it can be right of first refusal, and the deals structured this way are not in the benefit of the fintech entrepreneurs. So when, like returning to your first questions, when we first met you guys, I think it was one of the few players I've met throughout my life that were giving credit a product approach rather than a collateral and winners take it all approach. And I do see the, like, fintech, it's a buzzword in Mexico. Only 1% of the total amount of the loan book available has been funded by fintech entities. And what this means essentially is that we have a lot of inefficiencies of people that it's increasing the transaction costs and not adding any value. So opportunities are huge. Mexico, Colombia, even Brazil have plenty of assets that could be renewed, that could be tied as well for fintechs to be funding machinery leasing, car and equipment leasing, doing subprime leasing, and including some people into the financial system. And I always say that Latin America is a region in which you don't have a risk premium, you have an access premium. Because essentially, the problem in Latam, it's not that the opportunities are not available, it's that the sophistication of the market, unfortunately, does not enable liquidity to enter into the region and add as much value as it can add. And that value and the payment for all the people willing to take risks on the Latam region does not come from risk, it comes from access. And people have evolved, and markets have evolved in a way that they are used to handling their own SMEs without having access to liquidity other than their closed markets or the inner circles. So there are a lot of efficiencies that could be reached, in money could be funneled to these opportunities that increase by the day. And I do see this market as, at least on these first phases, the opportunities are already there. It's more of infrastructure that has to be created around to bring certainty to investors willing to put money in. And to also a lot of product development has to be made for entrepreneurs and successful SMEs to change their perspective on credit. Because as credit has been used by local and foreign institutions on an abusive way, there are many entrepreneurs that don't want to hear anything about credit, disregarding it could be a really useful tool for them to grow. So I do see that like the two high-level biggest conclusions I have on the region.
No, thank you very much for sharing that, Pedro. And I think so. Talking from my personal experience and the Credix experience, like our journey really started in the Brazilian market, right? And I remember as well, one of the first times 2 years ago, before Credix was launched, I was in Brazil and I was talking to these fintechs and these entrepreneurs, and it was really shocking to me indeed to see like they often had like very good loan books, they had like very good quality of credit, they had the potential to scale, but really because of like local monopolies of debt service providers and a lack of access and often understanding of global debt capital markets, they were paying massive premiums indeed through the lack of access to capital and the lack of the sophistication. And so that's immediately why we realized also when we started Credix, like we need to approach credit from like a platform and from like a product infrastructure. So there needs to be part like education for the entrepreneur, and we need to create a platform that can scale together with them. How do you provide at the first 250K, the next 10 million, and how do you scale with them up to $100 million facility of them becoming successful? And I think there indeed creating a value add approach is something that we have found very common in the Addem team and the Credix team. And I think there also the appreciation of learning from each other about the Brazilian market and about the Mexican market is really something that made our partnership successful, right? You said it earlier, we have financed multiple deals now together. I think just to give an example for the audience, just recently we financed a company called Tivos to do leasing in the Mexican market. One of our first deals we did together in the Brazilian market was Divi Bank for SME financing, or Tecredi for second-hand car leasing. So we have really transformed that vision of having value and having impact into actual deals and actual liquidity and access to capital. Now, of course, it's fun to talk about those successes, but to get there were also some like regulatory hurdles, legal differences, and often we speak about the blockchain aspect of things. But what have you seen, Pedro, from like a regulatory legal perspective that has started generating new opportunities, and which do you still believe are some important hurdles we will have to overcome in the Brazilian and or the Mexican markets?
Well, I didn't I didn't knew I didn't know at the time, but blockchain is a technology that has been used pretty much on everything that is traceable right now. First, we had the checks with this electric band that then turned into the credit card, that then evolved into a microchip on that credit card, and now you are able to use your Apple Pay component on your card without even putting that in on whenever you pay. So what crypto as a piece of infrastructure has, it's that it has been built upon traceability and data recording on an orderly manner. And that's what you need whenever you think about credit, because you need to understand how the collateral plays, who owns that collateral, whenever that collateral is being transferred to somebody else, how much it's worth, how much of that was financed by which entity. So I think there are two main aspects, both in Brazil and Mexico, but broadly speaking, on the DeFi ecosystem, which are enforceability on smart contracts, like how digital contracts can be enforceable on their local jurisdictions, because that would make life more easier for everybody. I mean, the main difference from underwriting deals in Brazil than and in Mexico, it's the speed at which the asset can change of hands. So if you want to pledge some collateral in Mexico to somebody else, that can take anywhere from 15 days to 45 days, 2 months, or even more. What I was impressed about in Brazil, it's, and this has all type of problems. As an example, like for short-term loans, you are not able to use that as collateral, because in order for pledging collateral and getting liquidity back, if that takes 30 days and the asset itself pays every 30 days, you are entering into a risk that you will never be able to go around, just because of the speed at which you can pledge those contracts under Mexican jurisdiction. And the other important aspect of of how DeFi will grow in the upcoming months, depending on local regulation, it's, although it's an asset that can serve in many ways as a debt input. So as it is treated from a tax perspective as an asset, whenever you convert that asset into fiat, you have some tax liabilities that emerge from that being taxed as income. And there are very few jurisdictions in which this does not happen, one of them being Brazil. It would be great just to have assurance on how much you would pay if you are transacting with USDC, as an example, as it is not illegal, and it's just a way to have digital dollars plugged in a digital structure to add way more traceability and eliminate in unnecessary intermediaries, such as the guys that distribute the waterfall, as an example. You don't need those if you are already living on blockchain. So those are the two main aspects I deem as relevant in the upcoming years for the jurisdictions we are working at right now. And at least our take for the technology, it's not going to stop, because there is a lot of money that it's being lost, that the funds are not making, that the investors are not making, and that the entrepreneurs are not making as well, because they are paying a high interest rate due to inefficiencies that could disappear if DeFi would work from an infrastructure standpoint, which is essentially what we're building, but also from a regulatory standpoint. Because if that money that it's being lost right now on inefficiencies, brokers, or different players that are not needed goes to taxes, then we are not adding any efficiency into the equation. So I think those would be like the two main aspects key for this market to be developed on the right way in the upcoming years.
No, definitely. And so indeed, like I want to unpack a few things there and share indeed a bit about how we are with Credix thinking about these things, and how together we're also building part of that future of that infrastructure. So I think the first thing that I hear is, today in these kind of transactions, they can get quite complex, and we have a lot of third parties involved. One of the big issues with those third parties is often like, the question is like, what is the value add of those third parties? And there are a lot of like manual transactions in between. Very often those third parties have like a monopoly on what they do. So also the quality of the service, the quality of the data might truly lag behind of what we expect. And there we can truly put the technology first, put the data, put the settlement layer into the blockchain, thus creating a golden single source of the truth, and being able to move money from point A to point B in a more efficient way. What definitely, if we then start looking at more complex private credit transactions, we want to run waterfalls, we want to do collateral management, all of that bringing on chain can create a certain trust between the different parties, eliminate some third parties, lower the cost of capital in the end for the end consumer, for the end SME that is borrowing capital. So that's something indeed that we have been very much focused on with Credix at the core layer of the blockchain platform of the smart contracts that we are building. I think directly related to that becomes the enforceability. And I think enforceability has two definitions in what we do. I think, first of all, we need some more regulatory clarity around, okay, once we tokenize a bond or we tokenize a loan and you're the holder of that token, does that give you the full economical right, and which execution rights within the legal system, within the regulatory system, does that give you to enforce that collateral, to enforce those future cash flows? I think that is one of the issues that we're working on. We're doing some work with the central bank in Brazil with Credix, and I know with Addem we're having some brainstorms and some interesting conversations how we can have similar conversations around regulatory clarity in the Mexican market. But I think even more important in emerging markets, it is just like the truth that there is still a lot of fraud. There still is a lot of like miscommunication, misappropriation of collateral. And thus by bringing that on a platform in a certain data standard can also help building trust for foreign capital. And that's something that we believe strongly in with Credix, combining local boots on the ground like you have in Mexico, like we have in Brazil, local deep understanding of the market, but bringing in institutional global capital on this platform and DeFi sources of capital. And to get to that combination, I truly believe indeed the efficiency, transparency, and enforceability will be key for us to grow in this market. Now, there, if we speak about growth, so today you're very active in the Mexican market. We have done some deals in the Brazilian market. How do you foresee the growth for Latin America? What do you believe are some other interesting markets, and why do you believe that these markets are so interesting and still have a lot of growth in them as well?
I think that's a really interesting question. I've thought about, and I've discussed this with you when we've met personally. IRR is not an abstract concept. It should be how much value you're adding. And when you're lending money, you have two components. You have to be able to pay for the risk, and also you have how much value you're added as any other product. Unfortunately, as access to money, it's really difficult on emerging markets. What has happened is that money has a premium just because you have it, although you're not adding any value. So whenever I see all these other lenders charging 18, 20, 25 interest rates in US dollars with platforms that do not add any long or medium term value, you start thinking about how many companies actually can pay for or make 25 or 30 or 35 IRRs on a consistent way for many years. And when you go and see stocks and like all these semi-public or big private type of issuance, stock issuance, you don't see many companies making more than 15, 18% IRRs. So that's something that it's broken up. And I think that's something that we will need to be fixed in the upcoming years, because money essentially will have to flow where it's adding more value on a traceable way. And I see two big trends on that regard. My take on fintech on the medium long term, it's that it's going to be a distribution game. I have seen many fintechs that say, hey, we have artificial intelligence and we're partnering up with this key, or we are developing this key technology component. That doesn't make sense. Like if someone has a superior technology for underwriting than you, then you must be using that technology, and fintech will start being more product focused and client centric rather than only having a risk perspective, because the clients that are receiving the loans at the very end, they are buying a product, and if that product has or addresses the many problems they might have to face whenever they are trying to pay back for that loan, that is probably what will enable fintechs to charge a premium on their product and differentiate themselves for some other players. And my other take is that all these ESG related type of metrics will become really relevant in the upcoming years, and LATAM as a region will become really relevant in the upcoming years, because in here we have water, we have nature, we have a lot of agro, and all those verticals could be built on a more efficient way going forward. And if they are not built on a more efficient and responsible way, we won't have any planet to live in the next 50 or 60 years. So money will essentially match those needs that the world has, and just as inflation will adjust for who is adding more value or resolving more problems. And that's like the two trends I see coming into the region in the near future. And I see that the players, both fintechs and funds or infrastructure platforms such as yourself, the ones that are able to consistently add value to their clients, to the ecosystem they are playing in, and also to the problem we will be tackling as humanity in the years to come, will be the ones that, for the first time in the history, will be earning more money and will be able to attract more funds. And the Latam and Mexico regarding growth, I mean, they will still be growing regions, just answering that last question. But I think the opportunity is huge if we would take a picture of it right now. Like, we don't need to grow more, we need to get better. I mean, Crédito Real, Mexarend, Alpha Credit, Unifin, all of those companies were bust last year because of the lack of discipline, and they had, like, honestly, rookie mistakes regarding how to manage to properly manage risk, like a mismatch of assets and liabilities. What happened with Silicon Valley Bank, which is like just really lowest standards regarding hedging the variable interest rate problem they were facing. So we don't even have to grow. I think there are many opportunities right now, like low-hanging fruits, just making what is available already better. And for that opportunity to be tackled, we would need like a huge portion of the available funds already. And then we could tackle the upcoming opportunity of how that's going to develop on the years to come. And if we communicate between, because I've been seeing like some questions regarding how, if we are underwriting in Brazil, how the Mexican and Brazilian markets are alike. What I would say is that we have similar problems, but on different phases. And what we are trying to tackle on Addem, and that's why we chose Brazil, although we were told it's not for amateurs, it's how we can learn from ecosystems that we understand, that have similar problems, but have developed different capabilities. And how we can make or push agendas in which governments, platforms, and even fintechs communicate among each other to create a better value proposition at a region level and not only at country level. So that's my take on how it will work, how I think it will play for LATAM, the needs that the world has and the opportunities that are being looked at. And I don't see many regions actually having the capability to pay decent yields as a result of the place they are at right now.
That's why I like to do these kind of sessions, and that's why I like to do these kind of brainstorms with you, Pedro. So much wisdom in that answer, and so much that is true, and so much that we have experienced that well within the Credix ecosystem. So I think indeed, like unpacking it a bit again, like we need to get better, right? I think that's something we see if we want to attract like international global capital at scale. We need to get better in credit risk management, get better in data standardization, and provide an integrated infrastructure where we integrate legal, underwriting, and technology stack into a platform in an infrastructure. And that's truly the vision that we have with Credix, and then create an ecosystem around that of high quality partners of entrepreneurs who understand the distribution game that fintech really is, as you discuss it. Experienced partners of underwriting, of managing credit risk, of monitoring, of reporting, like what Addem is building, with local capabilities, with a global mindset, with a credit value, credit product mindset. Bringing those together on that standardized platform will attract that global capital. So by getting better, we will already infuse growth. And then I think once we have set that standard and we have set that market where yields can clearly be generated, cost efficiencies can be created, we can move from there into the growth and the scale phase, because it definitely is there, right? I heard you saying 1% only of the loan books today is fintech. Numbers are very similar in Brazil. I think it's 1-2%. So still the monopolies that some of these big banks have, and the market share that can be taken by fintech, the market share that can be taken by alternative asset managers is huge. And then we're not even talking about the potential of growing the market of the unbanked as well, right? There is a bigger market out there. And once we have better controls and standards, better access to liquidity, we're taking market share, we can start moving into those markets as well. So I truly believe we're not talking about a multi-billion-dollar opportunity, but we're potentially talking about $1 trillion opportunity. But it should all come from that mindset of value creation, being technology and ecosystem first in thinking. And I like the way, and I think it's very similar as the values that we have from a culture perspective between Addem, Credix, and most of the fintechs and partners that we work with, is that ESG driven mindset. How do we really make it better for the local people? How do we support the entrepreneur? How do we think about like making the world a better place from an agriculture, human and nature perspective? So really excited about all of that. And if we generate that excitement into the Credix Addem partnership, what really excites you for the next 10 years in this market? Where do you believe we will see technology helping? Where do you see the state of the market going in beyond 2023? Any bold predictions for the future that you can share with the audience that we have here?
I'm really, I mean, we both know that what emerging markets stands for, it's emerging related to their governments, of course. But what people don't realize usually, it's also related to its entrepreneurs. I think local ecosystem, it's related also to the top entrepreneurs you have into the market, because they set an example of how to do things, what are the problems that people should be focusing. I don't have the specifics on the Brazilian market, but in Colombia and in Mexico, and mostly in Mexico, what I can say, it's the top 10, top 50, top 100 entrepreneurs are not doing amazing stuff. Like most of them are on telecom, mining. They have been rich for most of their life. They will keep on being rich. They are just investing a fraction of what they own on either innovation or setting up some standards on ONGs. So I'm really bullish on the region, because I believe that the latest cohorts of entrepreneurs will have a way more empathetic framework and innovation framework to build the next generation of companies. And if we tackle the problem of growth for the region by developing decent cohort of entrepreneurs that later or further down the road are the ones setting the example, are the top 50 or top 100 entrepreneurs in the region, then we can change completely how money is being made, how government interferes with innovation, how all these social inclusion problems can be tackled from a product perspective, not only from assistentialism perspective. So I'm really bullish on how the region will keep on developing. I think both Brazil and Mexico specifically have had already an approach in which, disregarding the latest bad governments we've chosen, is from an institutional standpoint, we still seem strong. I can't believe that the Brazilian market went up like by 10 interest rate points, and it's still on its feet in the last 2 years, and somehow it has managed to reinvent themselves and keep that liquidity on flowing. So I think we've been already pretty stable, taking into account we're still in emerging markets, both Brazil and Mexico, and I don't not see that changing, but improving in the next 10 years. And the main trends we see within Addem Capital in the medium long term are agro, health, and renewable energies. Because it's asset backed, it's traceable. There is a lot of technology that could be renewed, and only by renewing that technology you can add already a lot of value. And the lack of sophistication on those verticals, it's way behind what we've reached in fintech. And in fintech, we are not yet on a decent stage. So that's like our take on the future to come.
All right, thank you very much for sharing that, Pedro. And I really agree with a few points there. So I think indeed the future, like always, and the future of credit, future of finance, the future of the economy will be built by people. It will be built by entrepreneurs. It will be built by people who dare to take the risk and make their hands dirty to really rethink the status quo. And I think we start seeing a lot of like people in Mexico, in Colombia, in Peru, in Brazil that are willing to do this. And I believe that our task of building this new kind of debt capital markets infrastructure is really to abstract away the stress of like getting access to credit and getting access to debt, so they can double down on focusing on their business. They can double down on the problem solution. And if we do that together as an ecosystem, we will also be stronger positioned for regulatory change, for driving legislation, which will be definitely needed into this market, to be pioneers and to grow and to attract that outside capital. So good to hear that there is much more work to be done, but we're very bullish on the future of this partnership and of the markets. Now, before we wrap it up, we have a few questions here from the audience. So let me quickly screen through a few of them, and we might not be able to tackle all of them, but then we will always get back to you with some answers. Something I see here coming back a few times is, so what we talked about is like, hey, we need to attract global capital, local funds, local players. They're often not like willing to fund to fintechs or invest in structured or in private credit. Can you maybe elaborate a bit more, Pedro? Why is that? Why do you see that in Mexico? And how could we potentially get them over the line to also get more of the local players and the boutique funds involved?
Sure. No, sure. That's a good question, but it's a really simple answer. Money, it still gives you access to opportunities in which there is like a little money and a lot of opportunities that need money. So local players haven't innovated because they don't need to. They have a huge market. Banks can still make a lot of money from deposit accounts. Like Mexico, it's a market that it's unpenetrated on banking accounts for 50% of its population. So essentially, they don't have to do any effort or improve their product in order to make money. And that's has been the rule for the last 20, 30, or 4 years. The foreign players that have entered into the equation, not all of them, but most of them have entered into Mexico, Brazil, Colombia, looking for high yields, not looking to add medium long-term value. So it doesn't matter if you have local options or foreign options. I think they are not willing to take the risk because they don't need to. So the only way that's going to change, it's developing a different type of business model in which we or people are able to access to the best opportunities available into the market by developing highly standardized products that aim to tackle specific niche problems for the different type of clients that are looking for this money, and push, therefore, these legacy players to improve themselves, be better, and bet on innovation. And I think that has happened already a little bit in Brazil, a little bit in Mexico, in which banks have realized and have put some money and teams to develop different products under a completely different approach. And I think that trend will not stop. Fortunately, we'll be able to push it a little bit from what we're doing together.
No, fully agreed there. And then maybe immediately following up with another question that I see here from the audience, like how has Credix helped you, for example, entering into the Brazilian market? How did that partnership evolve, and how did that help you?
Well, we wouldn't have been able to enter into Brazil without Credix. Like that's for sure. I mean, it's it's a wild animal. Like the main difference between Mexico and Brazil, because I saw that question too, it's Mexico has a lot of access to financing due us being close to the States, above 30 or 40 million USD. And in Brazil, as you don't have that option available, what emerged was a lot of liquidity for late seed stage companies and Series A companies. So it's like having a problem that it's solved on different stages in Brazil and Mexico. And the infrastructure you guys have built or Credix have built for us to be able to deploy on an efficient manner and have a lot of data on the opportunities we envision to fund before even assessing if we like or would like to fund or not, it's impressive. And differently from what people think, at least for the tickets we are providing, tickets like fintechs do not differ widely among each other. I mean, they have certain assets, they have certain debt equity ratio, they have certain yield expected, some late payments coming in, some strategy, specific strategy for tackling those late payments, but it's not a really complex business. What is complex is for you to get the data right and for you to be able to ensure that whatever the company is showing you actually has some support on the back. But if you're able to bring the companies to those stages, and I think that's essentially what Credix does for the Brazilian opportunities we've seen at least, then the decision is pretty easy. Do I like the asset? Do I like the entrepreneurs? Do I believe in their growth plan? And if you do, what happens with Credix is you are able to fund that opportunity and have enforceability over debt agreements and traceability on everything that's being shown on a couple of slides on PowerPoint for you to disburse. So, I mean, Credix not only has been helpful, I think we would have Brazil still on our roadmap if I hadn't come across Thomas on that random introduction.
No, thank you for that, Pedro. And maybe I will add some things there immediately. I see here a question like, what are the biggest 3 bottlenecks in efforts to bootstrap this fintech debt syndication market so far? And I heard some of the things coming back here. So I think first, if you want to build this kind of global marketplace, global platform, global infrastructure, you need high quality originations. So it really starts with having a good local understanding of the market, finding the assets, the entrepreneur, the fintech that you really like, that becomes investable and that becomes scalable. So I think that is one of the first bottlenecks. You have to be able to originate, and you have to do that at a very, very high quality level and make that scalable. I think secondly, you need to get access to capital to also be able to grow within your syndication market, right? So remember, what we don't want to create is kind of like a graduation risk. We want to create a true journey for the entrepreneur, a standardization where from their first 250K check to the $100 million facility. So you need partnerships with large global asset managers, with global investment banks that are interested in this product. Again, this is a bit of the marketplace problem, chicken and the egg. Like, you can find very good originations, but if you don't have capital, how do you make it attractive for them? Like, you can find the capital, but if you don't have the high quality originations, how do you get them on the platform? So it's really first solving that chicken and the egg problem. And then once you have both on board, is now how do you create a standardized infrastructure? So standardized on the level of the data. Here is where the blockchain layer, the data layer, the marketplace layer comes in. Standardized on the way you work about underwriting with underwriting partners, and then also standardized on credit as a product. So how do we think around collateral? How do we think around enforceability? How do we create about digitizing that and creating the most efficient process across different partners in the network? And then like we want to do that, of course, in a global kind of way. So we want to make that repeatable for Mexico, Brazil, Colombia, and potentially any market, any emerging market that has similar problems, that has similar fundamentals. We could bring this platform, we could bring these players, we could bring this ecosystem. And so that is also why from Credix, we always like to think about ourselves as a platform and an ecosystem, because with partners like Addem Capital, we're continuously thinking about these problems. How do we bring more value to these markets? How can we bring better standardization? How can we attract more global capital? And how can we double down on our winners? How can we double down on the entrepreneurs, on the fintechs that we are supporting in these local markets, by giving them access to technology infrastructure and access to capital? And so I think maybe with that said, Pedro, I really want to thank you for the time today, for the partnership with Credix. I'm really excited of some of the announcements that we will be able to do later this year on some of the things that we are working together. And then I want to remind the audience, so if there are any questions left, feel free to keep posting them. We will have a look at them with the Credix and Addem team, and we'll make sure that you get a response. The quick reminder, on the 23rd of March, we will have our next webinar together with Circle, one of our fintechs, Clave, and DRW Cumberland, one of the hedge funds on our platform. But then nothing else rests me to do again to thank you, Pedro, very much for your time and the partnership.
Thank you, Thomas. It was a great conversation, and thanks to everybody that listened. And we are looking to grow the team. So if everybody is interested on joining Credit platform, happy to talk with you as well, or if you have any questions or interest on the ecosystem. Have a good afternoon, Thomas. Thank you very much again. And well, talk to you soon.
Thanks to the audience. Thanks, Pedro. Talk soon. Cheers, everybody. Bye-bye.